So we have very many questions. And I'm happy to have a so strong company in the table, because I had many questions, but I had very few answers. I hope you have more. I would add one comment that I'm especially happy today because of the panelists, because there are real people who are doing real job. In every company there are PR persons, and there are people who are doing the work. Those people here are everybody who are really very much hands-in the operations. And as Tonu said in one conference, that he's not the marketing guy or PR guy, but he's a production manager. He's producing money, he's producing assets, he's producing value. And it's not only about you, but there are some other people as well who have to say that, guys, let's make some small, short introduction, because maybe everybody are not aware that who is who, and just about your company and shortly. Starting from you, Tonu, please.
Hi guys, Tonu Uustalu is my name, EfTEN Capital, Chief of Investments. We started 2008, assets under management is 1.1 billion. Out of that, 50 million is only residential.
Hello, I'm Martinš Žibūda, Deputy CEO of Eika. Eika is one of the leading and one of the most oldest developers in Lithuania. We just celebrated their 30 years anniversary some months ago.
Hello everyone, my name is Viktorija Čijunskytė. I'm co-founder of real estate crowdfunding platform Profitus. We are leading crowdfunding platform in Lithuania, and we have already our crowd, and all our 30,000 investors are invested more than 100 million euros.
Wow.
Yeah, I'm Chief Economist at Luminor Bank, so one of the largest banks in the Baltics and very active in residential real estate, especially recently.
Hi, I'm Martin. I come from Latvia, a country of winners, as was mentioned in the previous panel. I think that was a good thinking. Yes, so I'm the head of the Alliance of Real Estate Developers of Latvia. So we have as members 40 developers and investors in Latvia. Many of them are Estonians and Lithuanians. And we're working to make the investment environment in Latvia in real estate more business friendly.
Great. Let's start from Žygimantas, from you. You are the money guy. You are the smart guy who is close to the big money in bank. Could you please give some understanding how you see what is going on right now in the Baltics? Let's focus on the Baltics and skip right now Scandinavia maybe.
General feeling is that it's still slightly better than we had feared, because we had two major shocks. One was energy shock and the other was interest rate shock. So energy shock was not as bad as expected, and interest rate shock, yeah, it's still here, and we haven't climbed up the hill, and we don't see that we're going down. So until we haven't climbed, probably we will not reach the rock bottom in housing market. But as regards financing, again, there is a difference between Baltic states. We see it very clearly. Estonia is slowing the fastest, if you put it more politely. Latvia is kind of sleeping beauty, we call it. They haven't picked up since 2007-2008 crisis. So they don't have much potential to drop. And Lithuania is kind of winning, not in ice hockey, but in this economic competition, at least so far. And especially the recent 2 months were much better than expected. So it's kind of uniqueness of Lithuania, that inertia is pretty strong. And there's still this feeling in the air that maybe we can also dodge this crisis as well. This doesn't mean that we will, but we have successfully dodged this COVID crisis, and then when the war started, also we didn't feel immediate negative repercussions, and now again we kind of have this feeling. And this feeling is also not just feeling, it's based on the fact that we have plentiful financial resources, like regarding banks, for example, how banks react to the situation. So credit standards are pretty okay. They tightened a little bit maybe, but not something dramatic. Margins actually declined, so competition is pretty...
How much?
It used to be at peak level in Lithuania, it used to be roughly similar to Estonia, 2.4, 2.3%. Now it's well below 2%, sometimes even 1.6, 1.7. So even our central bank initiated discussions to ease like refinancing in Lithuania. Maybe in Baltics it's also quite could be quite relevant because it's not common for households, because we were going up the hill. You remember in 2006, 2007 margins were only 1%, less than 1%, so there was no point, but we had 2020, 2019-20 was a peak, 2.3, 2.4%, now it's falling. So at least the households can maybe lower their overall spending. So basically the situation is that thankfully we have money, we have cheap money, thanks to the fact that we have more deposits than loans. So banks are still pretty active, and they are competing, and the money is still flowing to residential real estate. And people, especially in Lithuania, this graph was very nice that you showed, this confidence is very strong. So January, February was kind of a bit weak, but now we see some recovery. So I would say not as bad as expected, but we are not out of the woods yet.
Let's say the real estate has been always like a desired area for the banks to finance real estate. It's the most secure, let's say. How you see right now the situation that how you're preparing for some kind of crisis already. We remember very well that all banks had their SPVs in 2009, 10, 11, and so on. That how you see it, that we heard some rumors that something is going on. That how serious is the situation that right now, what is Luminor doing? How bad is the situation with the loans? Are people still paying back, you know? Do you have more problems by countries? And the second part of the question is that difference between Finland, let's say Scandinavia or old Europe, and the Baltics, because the bank margins were completely different, 0.5 or 2% on average. Then this is where the difference is coming quite remarkable. That in the Baltics we have similar situation. How come that Estonia is doing so much worse than Lithuania? What could be the reason by your side?
Yeah, so basically, answering your first question, we have been preparing for something unexpectedly worse or bad since 2019, and it hasn't materialized in 2020, hasn't materialized in 2021, hasn't materialized in 2022. NPL ratios, non-performing loan ratios, are extremely low, historical standards. We see some signs that they might be picking up slightly, but from a very low level and at a very kind of low speed. So basically, I would say that, again, this is still better than expected. And coming to your second question, the difference between Scandinavian countries and Baltic probably is primarily because of the level of indebtedness. In Scandinavian countries, it's one of the highest in the world and in the European Union. In the Baltics, still, it's one of the lowest, and especially in Latvia, and to some extent in Lithuania. Estonia has slightly higher. That's why probably it feels a bit more. And also, price-to-income ratios have been improving for many years. Now there's a sharp reversal, and again more in Estonia because income was not growing as fast during the last 2 to 3 years in Estonia, even though prices were growing very fast. I would say the same as in Lithuania, maybe faster. So in Estonia, affordability has deteriorated the most over the last 3 years. That's why now we have to kind of adjust this. So the adjustment process is going on. In Lithuania, it deteriorated substantially less. So maybe it could be only a minor adjustment, maybe up to 5% maybe drop in prices. Maybe even we can avoid it altogether. And in Latvia, there is not so much to adjust because, as I mentioned, it was like Sleeping Beauty, etc. And it's also visible in Latvian economic figures. Actually, Latvia is not in a recession, so this winning ice hockey probably will give some additional positivity. Yeah, who knows? Basically, yeah, Latvia should be actually like probably they could even become the leaders in the Baltics for some time because many Lithuanian and Estonian investors have invested recently in Latvia. So yeah, maybe.
Good thinking. Good thinking.
Good thinking. Yeah.
Thanks.
And also one more thing. The third thing is again this loan to deposit ratio. Looking from a bank perspective, in Lithuania, loan to deposit ratio is the lowest. So basically, we have most plentiful, cheap financing resources. Latvia is in the middle, and Estonia is kind of like on balance. So basically, banks can start feeling pressure, especially some banks, because financing costs have increased a lot for Baltics, and if they don't have cheap deposit financing, then they can be more reluctant to finance projects going forward.
Thanks for the comments. I have a questions to other guys as well. You look very nice, but I really would like to get some answers from you as well. Tonu, let's start from you again. As I told that I would say that the changes started from last year, September. Those very remarkable, which are right now influencing us mostly. That what have been the major changes in your sector? You have a pretty big fund. You have a commercial real estate in your fund. You have a residential. That what have been the biggest major changes? How you've been adapting? What steps have you taken? What's the result of out of this? And maybe about your sector overall, not only in Estonia, but in the Baltics. Maximum 5 minutes, please.
Okay. How much time I have?
5 minutes maximum.
5 minutes.
But you were smart.
Let me just give you one example for comparison. First thing, I would like to remark that the shown average apartment prices, what you showed in a stage there, you have to keep in mind that here in Lithuania, you sell grey finish apartments. This is a difference because if I look at Tallinn's so good numbers in average prices, this is not actually true. So you have to put it in the finishing as well. But this is one remark. But with the numbers, when we 2020 started our residential fund, because of the let's say institutional investors basically demand from us that guys, you're making always a commercial real estate funds, but there's nothing in the market where to invest as an institution to the residential lease market. So we made a fund, and our expectations were that we will achieve 5 to 6% yield. Today, as we flew here from Tallinn, our small bank in Estonia, Coop Bank, announced deposit interest 5% for 1 year. 5%. So our expectations, taking all this hassle, buying land, building up the apartment store, and achieving 5% yield, is today you can put your money into deposit into Coop Bank and achieve 5%. This is not a commercial for Coop Bank, but this is actual public announcement. So there's a huge gap at the current moment to develop any residential for leasing. I could say 30%. I'm very much agree with our one competitor who in Estonia in a similar conference told that maybe then construction prices could drop 15% and lease prices would go up 20%. Maybe then some of institutional investors would be interested to look at our fund once again to achieve some kind of return, because at the current moment, if you take leverage to the residential fund, it means basically if you have done it with 5% yield, it's never negative leverage anyway. Luckily, we have managed to buy our properties earlier a little bit. Now our Riga's office partner Viktorija is sitting there. We are approaching one project in Riga. As you told, the Riga is a winner's in a winner's side. We're trying to make it in Riga, one project, but which is not plain and vanilla. It's not the landlord. We're buying one apartment which is basically ready-made. Yeah, let's say like this. And that's why, as we are thinking at the current moment, we are just announced yesterday that we actually established special opportunity fund, where we are now gathering new investors from institutions all over the Baltics. Because as the bank representative told us that the situation is much better than expected, I would conclude that maybe we should expect more in autumn to get it worse. Because I don't see any good solution at the current moment to attract investors into our funds in that kind of yields. And I don't see how rents could go up 20%, for example.
It's quite impossible, I truly agree with you. And the similar situation is in the all countries in Europe, and funds, with the similar funds like you. And they're struggling with the same things. You can buy right now the shares of those funds with minus 50%. You can buy big Finnish construction companies with minus 50% their shares. That is what is going on. Let's proceed. I will give a next question to you. Because the situation in the development is quite similar, you know. You are more confident, but you will be affected. You will one day, unfortunately, I believe. But how do you look to the future, to the near future right now? You know, you having so many different projects all over the years, and right now also ongoing, that if in Estonia and in Scandinavia, everything is on hold since the September, October last year, let's say, then right now here you're still planning, if you just check the presentation what we had, you know, the delivery in Lithuanian market, you know, it's recovering. What is your view in, let's say, 6, 12, 14 month perspective? How confident you feel, and what steps what decisions you are making today? Because everything will take time in this process.
Yeah, we hear what you say, and actually we are not that pessimistic as Finnish guys, let's say. We haven't felt that because we talked to both parties. From one party, of course, the main challenge was interest rate, which has increased dramatically, and the main change started last year, middle last year, after this discussion started, and interest rates started to increase. So from one side we have investors. We as development managers, we approach our investors who started thinking, as you just said, whether it's worth investing, either maybe saving, or maybe even and discussion about development versus cash flow generating projects. So quite many of our investors moved to Poland and started buying up assets, cash flow generating assets for 8 to 9 yield, which is fantastic in Lithuanian on Lithuanian level. Yeah. So we have troubles right now in persuading them that please stay. Keep going with residential development, because it's just temporary, and money cost will not be that high as it is right now. It is quite temporary. At the same time, residential projects, they are quite life cycle of those projects is much longer. Yeah, it's 3 to 6 years maybe. So you cannot just change it that every year that you start or stop it. So right now, and actually we succeed. Actually, we find diligent investors who believe in the market, and they still say to continue. Just we manage our risks with lower volumes, with phases, with stages. Let's say we stopped in one of our residential project, which is of 4 phases. We stopped the second phase, and we try to construct as fast as we sell. So as long as sales speed dropped quite dramatically, we also adapt ourselves and we just construct less. But maybe as we are market leaders, we still find investors who either invest into residential or they invest into commercial. We have 2 business projects, office building projects ongoing right now. We find also quite many investors who invest into industrial, and we manage those construction management and project management. We take care of those projects as well. We just recently signed an agreement in Klaipėda. Oil factory will be introduced quite soon, so we take care of that. So the second first issue is about adapting yourself to new reality, which is of lower level. At the same time, keeping relationship with your long-term partners. The second is diversification, which is not only residential. We just maybe some 10 years ago, residential projects were dominant at Eika, but now it's less than 50% of our all investment volumes. So diversification is the key element. It's both in terms of property types, residential or commercial, but also in terms of investment volumes. So I think, well, at least right now, we don't feel such negative attitude as you presented from our northern neighbors. And at the same time, unfortunately, we don't feel any construction decrease of price in construction level. Yes, we started receiving maybe some free proposals out of 14. When we asked 14 contractors to make their proposals, now we receive 3 or 4 instead of 1 just a year ago. So you have some negotiating power already, but it doesn't seem that construction will decrease soon. Not yet.
It can't, because of the salary increases still, if you look at what is right now estimated, and all the prices of material prices as well, that they've been coming down, but they cannot. And I have an idea about Ukraine. We've been talking about Ukraine as well in another room. That can you imagine when all the world will start to rebuild the Ukraine? It will take tens of years and a lot of resources, human resources plus material resources. If the war will end, we don't know when it will happen. But my friends in Estonia, they are buying construction technique from all over the Europe and Scandinavia. There is nothing available anymore because the factories cannot produce so much technique, and whatever, when everything will go to Ukraine. What will happen with the construction prices then here as well? Wow, I don't know. You don't get this one proposal maybe anymore, for the same level that it can totally change the world.
Well, search for employees is a bigger challenge for us than getting an order.
Mm-hmm. Tonu, would you like to have some comments to Martynas? I thought that you had some. Okay. Thank you, Martynas. Viktorija, you've been doing absolutely great. That I got more familiar with your company, and this 100 million is respect. That you've been doing a great job and growing fast. That what has been happening in your sector, in your financing sector, that how your clients feel, how your projects are doing, and give some overview. What is the price for the money today, and how you see it changing in the near future?
At the moment and last 2 years after COVID crisis, because I think that we live in that crisis for 3 years already, and turbulence, and We have really big real estate developers pipeline for financing. And I think that in these turbulent times, exactly crowdfunding founded its place between in investment map for crowd, for people who would like to invest in real estate, and in the other side, in the financing field. Because when the bigger banks becoming more conservative, they are searching for alternative money. And exactly, I can mention 3 types of alternative money: bonds, private debt funds, and now crowdfunding platforms. 10 years ago, they just started, this business just started 10 years ago. So now I think that crowdfunding platforms founded its place between financial institutions. So, and if we're talking about the prices, when crowdfunding started, when we started our platform 5 years ago, the price for developer, because we are oriented only in real estate developers, were 12-14% annual interest rate. After 3 years, more people get used to use the platforms because it's not institutional money. Just simple people investing in real estate, 100 euro. So they expect return. And for example, when they were investing in a residential apartment for rent, they get 6%. And when they're investing in platform, they don't need to do any job and they can get 12%. So, and then later they started more trust platforms, and before 2 years ago, for example, a risk rating developer, it means with well known, with great experience, people wanted to invest in that project for 5% annual interest. Of course, then the war started and interest rate raised a little bit. And at the moment, what's different comparing with financial institutions, banks or credit unions, that the price of money is without Euribor. So it's fixed. So, and it's important that developer can count its expenses. What else I would like to mention, what's also, it's important that there are 2 types of loans, for development and for cash flow projects. And most of our clients are developers, and their use for money, it's very short time with the great spike. So it's not so important comparing with cash flow projects. So,
this is very good point actually what you pointed out, because I remember the cases when one friend of mine was taking the loan with 15% developer was constructing apartment house, I don't know, something 100 apartments in Estonia, 15% a year. But if you need the money for the 6 months, it's not so big.
3 months.
Yeah, or even 3 months, you just need the money. And that's very, let's say...
Then it's not so important in all expenses of the whole project.
Yes, yeah. Absolutely. I have one more question to you that, in those times where everything is changing right now and it's changing, something is going on, that it's an opportunity to benefit out of those times. And this crowdfunding is something different, This is not so conservative as bank business, You are quite flexible, and, that how could you advance more from this situation? What could you do more just to get this competitive advantage right now, or to become even stronger and to take the market, or comparing with the banks? Banks are doing extremely well. All those annual figures are absolutely great. But what could you do now better?
Yes, when why we became leaders in our market. Yes. I can tell you, we were really flexible, and we were very flexible for developers, and at the same time we can change very fast all conditions, and what's also important to get the answer of the financing. Then we are quite small and niche product business, so that means we focusing only on developers, on real estate developers. That's why we understand this market very well. And we can create with developers the structure of financing together. That's very important. We talk with everyone.
Thank you, Viktorija. Žygimantas, you're representing banks, all banks right now in the States, but you are from Luminor. Luminor came from Nordea. Nordea was not very strong in the Baltics, but in 2008 something, when all the other banks, they took very conservative position, then Nordea took the market and became a very, very strong bank. What is your strategy right now in Luminor?
I mean, maybe I shouldn't comment strategy, but I can say some facts. I mean, as I mentioned, our share of new housing lending has increased recently, and we definitely want to be part of a solution, not part of a problem. Yeah, as it has been for most banks in 2008. And one of the key reasons is that banks have plenty of cheap, accessible financing. So very different situation from what we had in 2008. Basically, back then we covered only roughly half of our loans from our own deposits, and another half came through Scandinavian banking groups via international markets. So when crisis started, also we had not been in the euro area. Remember that. And all this depreciation, etc., increased our financing costs. So basically, we had no other choice than to cut financing, and Nordea was the biggest financial group, so it had relatively better financing conditions globally. So, and they actually, frankly speaking, they didn't care too much about the Baltics, because Baltics were a small part of their own portfolio. So that's why we kind of were more kind of we kind of continued financing to a large extent, but now the reason is different. Is basically primarily because we have plenty of local cheap financing, and that's probably the key difference, and also this difference in the banking sector can also make the difference macroeconomic wise, and also for the whole sector. So as I mentioned, probably this summarizes best, and probably we were part as a banks, we were part of a problem back in 2008, and now we will be part of a solution this time.
Thank you. Martinš, Latvia is quite popular today, and Riga especially. I know so much about Latvia that if you're Riga, then you are the man, but if you're outside from the Riga, then sorry. That Riga is still the biggest capital in the Baltics by the number of citizens. And we talked some other facts as well today, but what is going on in Latvia? Is finally now a time to invest to Latvia? To enter the Latvian market, because we've been waiting this since 2011, 12. We're talking almost every year that Latvia will recover. You have to go now to Latvia, but in reality, it's the only capital in European Union where the number of citizens is in declining trend still. That, what's the situation?
Well, I mean, in terms of population growth or decline, actually, if you count the metropolitan area of Riga, so the suburbs of Riga, then the number of Rigans, and simply there are people who have moved from the city to the outskirts. You know, this dream of having a single family home and living by nature, that has affected the population of Riga proper. But basically, the sort of the populace of the metropolitan area of Riga has remained intact. But in terms of housing, what's going on? I mean, my thesis is that there is no issue with demand, but there is issue with affordability. So if you look have a kind of bird's eye view on the demand side of housing in Riga, then you see that 70% of Rigans still live in Soviet era apartments, which have not been renovated, and that's a kind of there's this kind of structural source of people as buyers of new housing, and also the let's say the rate at which new apartments have been constructed has been significantly, let's be clear about that, lagging behind Vilnius and Tallinn, for instance. I think in the last 10 years, Lithuania has produced and commissioned, I think, 45,000 new apartments, Estonia 37,000, and Latvia only 15,000. So there is clearly a demand and a room for even no matter what the demographics are, simply because of the obsolete Soviet era stock, there is a demand. But the problem is, I think, which is perhaps a fleeting problem and solvable problem, but still. I mean, if you look at what the effective rate of mortgage payment for an apartment is, let's take an economy housing 50 square meter apartment. So 2.5 years ago, basically, your effective mortgage payment for that apartment was 300 euros. Now, taking into account the rise, the boom in construction prices and the Euribor rise, it is 600 euros. So it's just like the same apartment, like two years in between, and you pay 300. You pay 600 instead of 300. I think that's a structural problem. We can, of course, wait until the Euribor rate will drop, and thanks to our economist today who explains that it will happen in due course. But what we are, for instance, discussing with the government currently is a reduction of VAT rate for new apartments. There are 7 countries in the European Union who have that, and that would make housing more affordable in Riga. That's what's currently on the agenda.
Yes, the Riga, this housing stock is completely different comparing with Vilnius and Tallinn, and it is coming from there. As we have some questions, then I would give some questions from the audience, then because those are really nice ones, some of them. Žygimantas, will Luminor take some action to help the lower than average salary reviewers to sustain having a house with a loan? What should the average Joe consider doing if loan paying because of Euribor is too much? Lucas was giving the question. That what actions you could do to help the lower than average salary reviews to sustain having a house with a loan? Did you get the question?
Yes, we are running out of time. I was just very short. Basically, we are reviewing it on a case basis, and we had already quite a few cases in 2020, 2021 also during this turbulence period, and basically usually it's solved one way or another.
Okay, and next question to you was that about the mortgage repayments, that do you have already some later payments and some issues that we touched this a little bit, that do you have a bad debts percentage-wise, or it's not the case?
Yeah, as I have mentioned, basically it's still close to record lows.
Mm-hmm. The same, it's quite the same in all countries right now. It's an issue already in the Scandinavia, big issue, but not here, even not in Estonia. That situation is quite good. Viktorija, banks tightening the loan financing, crowdfunding platforms like you have is like a last source of borrowed capital, especially for the smaller developers, which is true. How do you screen the projects on the platform for the investors to avoid a bad debt or this kind of default situations? That how you do consider and look to all those projects?
We started to change. We changed our risk assessment algorithm after COVID, and we didn't financing projects which are not liquid. So if you see, if you are investing in platform, you will see the projects which are very liquid. It's an apartments, houses in the cities, not somewhere, not castles far away in Ignalina somewhere. So yes, it's I think most important thing, the real estate liquidity.
Martynas, one question to you. Is your company willing to do discounts for clients since primary market is half dead? Sorry, those are not my words. And how are you acting that? Are you doing some discounts? Are you giving something for free? Are you covering the Euribor or some period? Or what is your strategy right now? Or a situation is not so bad maybe at the moment yet, but in the long term, I mean 1 year period. What ideas do you have?
More or less all the issues you just mentioned, yes. We covered and we proposed that, the main issues about price level, and yes, we do discounts. It's normal to make some 5%, up to 5 to some, up to 7 maybe % of discount, but it's, it's up to the level you set, it's just like very ambiguous, the level you just set. But if there is a buyer willing to buy, I'm sure he will agree on price with any developer. That's a buyer's market, and that's a very good chance to get the right apartment right now. But there are very different topics. Yeah, if we talk about buyers who buy apartments for themselves and buyers who buy apartments for investment. So those are totally different topics. So those who buy for investments, they are searching for more central locations, and actually that's seller's market yet. We just announced a few days ago about our luxury new project in Užupis. It attracted very high attention right now. We are fully booked with all with meetings and calls, and there are only 140 luxury apartments on sale right now. We mean it should be at least double or 3 times more to cover the demand. So if we talk about luxury segment, it's still a seller's market. If we talk about economy class, it's for sure a buyer's market.
Thank you. We are running out of time, actually. We are out of time. I would just summarize the way that we have a good days, good times, and we have a bad times. Right now we are facing with challenging times, not bad times yet. But something is going on always, that there are always transactions which are based on the needs that people are getting families, they are getting children, people are having divorces, but there is always need for the real estate, for the apartments. Those transactions will always happen. That in those challenging or bad times, maybe people will invest less like investments, or make those comfortable that I would like to have a bigger house or a bigger apartment. Those things will maybe be put on hold, but there will be always transactions at some level. And right now, based in the panel what we have right now, I'm not so much concerned, but still if I'm looking our Finnish operations, then I'm quite cautious. But Audrus, move on. I'm waiting for very nice figures from Lithuanian operations in the next half year. That in Lithuania things are good, and let's hope that we will not get hurt so much. But there are so many things in the air that yeah.
So thank you for that discussion.
Thank you.
Thank you.
Guys.